Welcome back. Well, AECI has delivered solid first half earnings despite facing challenges in the South African operating environment. The diversified chemical solutions company demonstrated resilience with its international operations driving strong growth, resulting in headline earnings per share more than doubling. And joining me now to discuss the company's performance is Group CEO Holger Riemensperger. Thank you so much for your time, Holger. Now, of course, as much as the overall result did show a good improvement, but of course, we need to dive into, I guess, the different divisions and geographies. And really, the first thing that jumped out at me was the commentary of South Africa's challenging environment, operating environment, which had an adverse effect on your reported results. Just contextualize that for us.
Yes, thank you very much, and thanks for having me. First I have to say we are satisfied with the first half year performance. Albeit we did hope for better results. As you have mentioned, we had some headwinds in our South African operations, so that is not related directly to the market. It is related to our own operations, and I'll come back to that in a second. So the resilience you mentioned on the international business, it's an important driver of our business. We are close in the first half to 1 billion EBITDA out of the international business. That are mainly 6 countries that are driving that result, which is the DRC, it's Australia, Ghana, Indonesia, Botswana, and Zambia. So those are our best performing international geographies, making up 95% of the mining explosives business of AECI. If you add our mining chemicals business, then it is mainly South African, and that's performing very, very well. That together would give you 95% of the overall business. So the headwinds you were asking for, that's specifically at our Matafontein operations. And what happened there, we had 3 major impacts from supply disruptions from external partners. We had 16 power dips in the first quarter into April, which shut down the factory for almost 25 days. So that's a significant impact. We had supply disruption on a product called AECI. There's only one supplier in the country. That's a product one cannot import. So we are relying on one supplier, and we were not supplied in full, only in parts. And the same is true for ammonia, which is our key raw material. Only one local supplier, 100% dependency, and also here we have not been fully supplied. So we are working with our suppliers, trying to improve the situation, and looking forward to hopefully much better second half with regards to the supply reliability.
All right. Well, let's go into your strategic restructuring. Of course, in terms of streamlining your business, you have been busy with that. At what stage are you in that?
Well, I would say we are beyond halfway through that process in the moment, which means we have sold in total 4 businesses, but major businesses. Our asphalt business, our US operations from our toll manufacturing Schirm, and another side of our Schirm Germany business, and our food and beverage business. So the US business of Schirm and the food and beverage business are in closing, so we do not expect any issue here. We have clear closing conditions, that's regulatory approval, nothing else. And the rest we continue to work on, and we are confident that over the next probably 12 months, we should be able to also find new homes for those businesses, but we are not under time pressure.
Talking about what you still need to work on, there's also in the commentary a line that says you had setbacks in your strategy execution, particularly under the value unlock pillar. What was missed there and what gaps need to be filled?
Yeah, I would say we have two major gaps or shortfalls in the first half. The one is we have planned substantial CapEx investments into our growth for the business going forward. We haven't been able to pull all those projects off, mainly because of our disruptions in manufacturing, where we had to relocate some of our technical resources to work on that as a priority.
Yeah.
So that put us back probably like 6 months on that part of the execution. And the other one was the headcount efficiency program, which for similar reasons, but also haven't been able to pull off. Also here we expect like a 6 months delay on those two initiatives from the Value Unlock program.
Yeah. And talk about that CapEx, I mean, with the funds that you are receiving from the asset disposals, I mean, funds that you have already received and funds that are still coming, but also as AECI navigates an uncertain macroeconomic environment, what then do your capital allocation priorities look like in the short to medium term?
We have committed to our shareholders that our first priority is to reduce our debt levels. We are halfway through that. So we have substantially reduced our debt. With the ongoing divestment program and operating cash, we are positive that very soon we can probably call ourselves debt-free. And with regards to investments, we are targeting investments into our core segment mining services, specifically mining chemicals, but also the explosive side, and in the targeted geographies, which basically is in first place Asia Pacific, Australia, and the African continent.
And just lastly, Holger, of course, we have to ask companies in every sector in terms of what they anticipate the impact to be on their businesses, just, I guess, the uncertain macroeconomic environment that is a result or that emanates from the elevated U.S. tariffs that are being implemented. So with that, do you anticipate any disruptions, whether direct or indirect, to your growth goals?
We need to differentiate between our two core businesses. So on the mining side of our business, we do not expect any, or at least no significant impact from that. In our chemicals business, it's a little different. So in the end, we are supplying into the manufacturing sector. And that manufacturing sector, again, is also strongly supplying into automotive. We know that automotive might be affected by the US tariff policy. So that can basically come back from automotive to manufacturing into the chemical sector, and then also impact on our business. However, we do not expect that to be major on our end.
All right. Well, thank you so much for your time and always giving us your time to detail the results from AECI. Really appreciate it, Holger. That was Group CEO Holger Riemensperger.